really hard to do when you're in bankruptcy. If that 180 days goes by and he's not able to get that money, then the bankruptcy court is going to adjudicate this business into a Chapter 7, liquidate the assets under a fire sale, and the bank will get the first proceeds on the sale of those assets. They'll get paid 100 cents. Everyone else is going to wind up getting pennies on the dollars. Now, who are them? Well, the stockholders of the business, Jim and his associates, and these guys, the unsecured creditors. Now, at this point, as I'm talking to audiences, I'll get business owners say, you know, Carlos, I don't disagree with any of this. It's true. I've seen this happen. But you know what? I've been in business 30 years. I've never had this kind of situation. You know, I never had this kind of situation. But I'm not disagreeing. I say, they happen weekly. So what are you suggesting? I'm suggesting you take every available cash flow that you have, any excess cash flow, and you use it to set up your own private alternate bank. Every available cash flow, sweep it in here, get it started, because this bank will mimic and do everything this other bank will do. It'll give you lines of credit. It'll provide you loans. It'll do the same thing. You need to set this up, begin to wean yourself off completely away from this commercial bank. This bank not only gives you loans and lines of credit, it also affords you tax benefits. Well, you don't get that over here. On top of that, this bank of yours also pays you in the form of interest and dividends. You don't have that happening over here. Better still, the terms on the repayment of these loans are so flexible, there's nothing like them in the entire financial world. Nothing like them anywhere. Because the business owner can pay them back on his own schedule, when he wants, when he can. And I'll go as far as to say, if he chooses not to pay him back at all, he can even do that. On top of that, no liens on any of the business assets. That's freedom. You don't have to deal with this mess. Again, the business owner will say, wow, all right, you're wanting me to break my relationship with the bank, but I'm telling you, I've had a great relationship with them. I mean, I'm doing well, but you know, this thing over here that you're talking about, I'm intrigued. Never heard of such a thing. Where's it come from? And I say, well, it doesn't come from the commercial banking sector. It doesn't come from Wall Street. It actually comes from the insurance sector. But I want you to make sure you're hearing me, because I'm not just talking to business owners and them getting away from the commercial banking sector. I'm talking about everybody. Because being a depositor, just being a depositor in a commercial bank has gotten riskier than ever. And why is that? Well, because of two laws. Two laws. Now, the first law, it's been in this country since the country was formed. It came from England, and so our banking system just absorbed it. Now, nobody's ever paid any attention to it. A lot of people don't even know about it. But when we had the 2008 financial crisis, some people started to wake up to that law. Because here's how that law works. Now, I know that these days, most of us make our deposits in commercial banks without going inside the branch. We do it all electronically. It's easy, it's fast. But there's still millions of people that go through the drive-through. If you're a business that takes in a lot of cash, you'll go through that drive-through 3-4 times a day, several times a week. Many people go through there to deposit their checks. And they all do the same thing we do. You roll down the window, stick your hand out, pull out that plastic container. You all know what I'm talking about. And that's where we put our checks and our deposits. Drop it down that tube. Shh. Sometimes, that tube is transparent. You can see that canister just flying